Hello, my name's Elisabeth Noble. I'm a senior policy expert at the European Banking Authority. Today, I will discuss the confluence of data, digitalisation, and regulation. So undoubtedly, we are at a time when our capacity to leverage technology is greater than it's ever been. With this technology, we can store, combine, analyse and leverage data sets in our business processes across the financial sector. So back office, of course, we can use technology combined with data to analyse better suspicious transactions, to automate regulatory reporting, and even to automate critical processes such as credit scoring. At the front office, we can use technology combined with data to target better our advertisements for products and services, to match better consumers with products that may suit their needs, and also to tailor products towards different consumer bases, potentially addressing risks of financial exclusion. But who has access to the data? Who has access to the technology? And what this means for consumer protection, the structure and resilience of the financial sector, and ultimately financial stability are critical questions occupying regulators and policymakers within the European Union, but also globally. Now, the European Commission has already started to action policy initiatives in this area. So, of course, recently adopted, we have the flagship Digital Markets Act, which will apply to gatekeeper platform providers and help regulate the way in which data can and can't be used across platform ecosystems. We also have the recently adopted Digital Operational Resilience Act. That is absolutely essential to promote high standards of operational resilience as we become increasingly dependent on technologies in our business processes. We also have new proposals in the areas of artificial intelligence and also the Data Act, which will further strengthen the regulatory framework in each of these critical areas. But a lot of policy work remains ongoing. Firstly, we have the review of the second Payments Services Directive. And of course, under that directive, we have mandated sharing of payment accounts data. Learning the lessons from that directive, we can then take that into the discussions about open finance and perhaps open data more generally, on which the European Commission is currently considering future policy initiatives. But are we getting the policy response right? And are we also getting our supervisory structures right as we see data, digitalisation, and new players increasingly come together across the financial sector? On this point, early this year, the European supervisory authorities produced our response to the European Commission's call for advice on digital finance. And in that report, we made some recommendations, notwithstanding the new legislation that I've just described. One of those recommendations was for supervisors to have enhanced discussions, not only on a cross-jurisdictional basis, but on a cross-sectoral basis, as we see these new groups becoming increasingly active in both technology and financial sectors. Now, some of those groups are the so-called big techs, which we see having both a technology and increasingly financial services footprint within the European market. But other of these groups are what we describe more generally as mixed activity groups, combining different types of financial service, sometimes with technology services or other types of services, for instance, travel booking services, car hire services, and other types of service. So we suggested there should be enhanced supervisory dialogue because among the provision of these different services, there may be a commingling of risk around the use of data, but also the use of common technologies. So we'd really like to encourage supervisors to come together to discuss better cross-group risks and, of course, cross-group opportunities. Further recommendations related to the ambit of the regulatory perimeter, where we noted that some of these companies may scale their activities significantly, but our existing approaches to conglomerate supervision and to prudential consolidation may not cover these groups because of the specific blends of activities carried out. And here we've recommended that the Commission consider expansions to the conglomerate supervision frameworks and to potentially consider expanding consolidated supervision frameworks to make sure that we can account for risk on a cross-group basis, as well as, again, to still allow for that opportunity by subsidiary companies offering multiple different products and services to consumers, potentially across the same technology platforms. Now, many of these discussions we're seeing replicated now at the international level, with the Financial Stability Board, the Financial Stability Institute of Basel, and many other groups starting to look at mixed activity groups across the financial sectors globally. And I would expect to see, as a result of those discussions, future policy initiatives emerge to ensure that we can ensure that our regulatory frameworks remain fit for purpose, but also that our supervisory structures remain fit for purpose and allow for that effective cross-sectoral and cross-jurisdictional dialogue needed if we are to ensure that we can effectively monitor interconnectedness and concentration risk and act on that risk where needed. So I hope that provides a brief introduction to much of the ongoing work we have as we see this continuation of the confluence of data, technology and financial services. And I would say to watch the space for new announcements within the next 12 to 18 months. Thank you.